Okay, we're already in the third edition of Crypto Class, guys. So remember, this is free tutorials on YouTube to help you understand how you could trade. More importantly, how you can understand the price chart and how you can get an edge in the market by just adding these simple tips and tricks. And I'm going to be giving you these simple tips and tricks that are going to coincide with each other and follow on from each other every single Monday. So the first one, remember, guys, the makeup of a candlestick. We talked about the extreme highs of a candlestick, the extreme lows of a candlestick, the wicks of a candlestick, and the bodies of a candlestick, and more importantly, the psychology behind what's going on behind the candlestick. The second one, I showed you that simple tip, how you can apply support and how you can apply resistance to your charts, guys. Simply, they all add up. So we understand the makeup of a candlestick. We understand how we can read clues behind the candlestick. We now understand how we can apply support and resistance to our charts. And this one's going to follow on because this is going to help you identify how you know where there's a top and how you know when there's a bottom. So there's lots to talk about in this video, guys. Like I say, it's going to follow on, and next week we're going to be talking about indicators. So let's dive in. Okay, first thing, before we jump into the charts, before we do the tutorial, guys, this is a free tutorial. I'm not going to be asking you for any money. I'm never going to ask you for any money. So I'm doing this out of the goodness of my heart. The only thing that I get, guys, is ad revenue. Ad revenue is pretty much next to nothing. So I'm taking time out of my day. I'm taking time out of my life, and I'm going to continue doing this crypto class as long as you want me to. But do me a favor at the end of this video, if you did find it useful, subscribe to the channel, see if I can get to 8,000 subscribers by next week. Right, okay, this is what you're here for, the analysis. Before we jump into the chart, we're going to be using Bitcoin as the example. I'm going to do a review and a recap of the last two videos, and I'm going to show you how it goes hand in hand. Everything goes hand in hand, and next week's going to go hand in hand with what we're talking about today. So we're going to put in a resistance line, we're going to put in a support line. You've got a support line and you've got a resistance line, and then price action does things like this. When you're trading between a range and you're trading between a range, you get your tops and you get your bottoms. You get your tops, bottoms, your tops, and your bottoms until ultimately you break out. So remember, guys, you bang on the ceiling and you bang on the ceiling. The more times you bang on the ceiling, there's a higher chance of you breaking through. However, we talk about getting the break. So at resistance, there's a higher probability of pulling back. So there's more chance of doing this. We talk about getting the break, don't we? That's the break. Once you've got a break, you come back and you retest. When you retest, the retest is the same area as the resistance level. So this is one way of getting the edges, waiting for the break, waiting for the retest. Because ultimately, what breaks through comes back and retests what was resistance as support. So how can we identify when there's a top here and when there's a top here? And how can we identify when there's a bottom here and there's a bottom here with higher conviction that it's not going to break to the downside? We can look for a couple of clues in the market, guys. And remember the makeup of the candlestick. Let's just get it out quickly. Got the body of the candlestick, and then you've got the wick of the candlestick. What we're going to do is we're going to go through real-time price action. We're going to identify these in real time. So there's the wick of the candlestick. So remember, if this is the daily candle, you've got the wick up here, that's the extreme high. You've got the wick there, that's the extreme low. This is a red candle, the candle opened here, that's the start of the body. Then the candle closed there, that's the bottom of the body. So that's a bearish candle. So what's that saying? At one point, the bulls have pushed price all the way up here. At one point, that red candle was green. Then the bears managed to push it back below the close all the way down. If it pushes below the close, that is a bearish candle because it's closed below the open. On the flip side, you've got the green candle. So if you just change that to green, got the green candle. Exactly the same thing. You've got the highs and you've got the lows. Right, now, how can you identify clues when you're at resistance and when you're at support? What you'll see, guys, time and time again, and we'll have a look at some charts, see if we can find some examples. What you'll see time and time again is something like this. This is a doji candle. This is indecision. So if you get a push-up, as an example, you get a push-up, you've got a green candle here, that's followed by this green candle here. That green candle there is showing exhaustion. That green candle there is showing indecision in the market. So that's our first clue because the bulls have pushed price all the way up here. And then the bears have pushed price all the way back down here in exactly the same way. The bears have pushed price all the way down here, and then the bulls have pushed price all the way up there. So it's buy orders and it's sell orders, guys. People are buying and people are selling. And at the end of it, we've ended up pretty much where we started. So that's an indecision candle, and that's showing exhaustion. Then what you're likely to get is something like this, a red candle that follows. Now, what that's called is a 3-bar reversal. You've got the bulls pushing up, you've got the indecision candle in the middle, and then you've got a bearish candle there. What else this is called, guys, is a lower low, lower close candle. And what that's signaling is the bears have managed to push price all the way below this body of the candle. So that's a lower low, lower close candle. And a lower low, lower close candle needs to be confirmed, not when it goes below here, but when it goes below the actual wick. So this wick is showing that the bears have pushed price action down here. So the bears have got some momentum at this point. But when you've got the lower low, lower close candle, that's shown that the bears have completely taken control. And the next candle is likely to look something like this, where the bears have got control and you're going to get a bearish candle. So that's how you can get clues from the market. And that's what we're looking for in clues in the market. But the next thing that we're going to be looking for is this. Use it as a line. So here's our resistance. In this instance, there's the resistance. We're going to be looking for this. If that's a resistance point, bulls are pushing up, rejection. Bulls have pushed up again, rejection. If you got a lower low, lower close candle at this point, that's signaling that the bears have got control, and that's signaling that there's going to be a short, or there's a high probability there's going to be a short. So if that happened, that's a double top, guys. Now, let me talk to you about double tops and double bottoms. How can you tell what's a double top and a double bottom? How can you tell what's a confirmed double top and double bottom? Because often you'll see something like this. You'll get a green candle to the upside. Here's your resistance level. There's your resistance level. You'll get a green candle to the upside, and you'll often get a wick to the upside where the bears have pushed price action back down below this resistance point here. Then what you'll get is a pullback. So you get something like this. Bearish candle, change that to red. And then you'll get another bearish candle, a lower low, lower close candle. Then what you'll often get is something like this. A green candle that pushes up. Change that. A green candle that pushes up to retest the previous high, and that's a double top. Often you'll get something where it creates an extreme high, and then guess what? Bears manage to push price back down below. So the next clue that we're looking for, guys, you're probably going to get an indecision candle. You get a doji candle at the resistance point, then lower low, lower close candle. So that lower low, lower close candle signals one thing: you're likely to get a short. So you've got a top at resistance, you've pulled back, you've come back through, and you've hit resistance. Then you've got the doji indecision candle, then you've got a lower low, lower close. That's signaling that you're likely to pull back down to the next support. So that's what we're looking for, guys. Now, the next thing that we're going to be talking about is time frame analysis. This is the daily chart that we're on now. So what we're going to do is we're going to look for clues. We're going to look for things like this. Get that? We're going to look for things like this, where you've got a rejection and you've got a wick, which has pushed price below a resistance level. And then we're going to go into a shorter time frame to try and get clues, whether there's any double tops or whether there's any double bottoms. So we use the Bitcoin chart in this example. Let's have a look. First thing we're going to do is create a range. Let's use this part here. Happens wherever you do it, guys. Right, there's the resistance point, there's the support point. So how can we get clues? How can we identify? We get double tops, we get double bottoms all the time. So you look in here, get that off. You look in here, this is a resistance point up here. Price is breached all the way up there. Now let's zoom into this. Zoom into this, right. You're at a resistance point here. Now you've got the green candle, which is push price up. I'm not sure whether you can see that. I'll zoom in a bit more. You've got the green candle, which is push price up. That's being rejected by the bears. The next candle is rejected by the bears. You've got extreme wicks, and you've got extreme wicks, which is push price above the resistance level and push price down. So what we can do is we can go into shorter time frames to try and find out whether there's any clues, whether there's any double tops, which would show we're likely to get a rejection and the pull back to the next support. So go in the 4 hour. Let's have a look at that. So the 4 hour. Not too many clues here. You can see rejection, rejection, rejection. We're getting lots of rejection at this point here, guys. Where do you get the lower low, lower close candle? So we're on the 4 hour. What about this? You've got an indecision candle. There's the doji. I don't know whether you can see the wicks very good on the screen. You've got an indecision candle. There's the doji. You've got an extreme high up here. You've got an extreme low there. Bulls have managed to push price up here. Bears have managed to push price down there. Then, would you call this a lower low, lower close candle here, guys? This one. It's not. Why do you think that that's not a lower low, lower close candle? Because it hasn't breached the extreme low of the previous candle, which is here, which is there. So because of that, that's not a lower low, lower close candle. The extreme wick has actually breached it. That doesn't count. The body needs to breach it because the bulls have pushed price back above the extreme low of the previous candle. Now, what happens on the next candle here? Absolutely battered. Now that takes out the whole of the previous candle and then some. So this is your lower low, lower close candle. That's showing that the bears have got complete control. However, if you were trading this, where would you put your stops? Put your stops above the previous high, then where you're shooting for. I don't know if you're shooting for down here. What does that do at your risk to reward? You can't take that, guys. This is your risk. Do you really want to be risking this much? So what happens next? We come back up, we have another try. We were rejected here. There's the wick, pull back down. So let's go into a smaller time frame, see if we can find any double tops here. See if we can find any double tops within this range. We go into the smaller time frame. Get there eventually. Right, here we go. So you can get more clues in the market when you look into the smaller time frames. You can see what's happened here. You've actually got a triple top here. Now, this is the choppiness that's happening. When you've got the daily, guys, all this is happening within the 1 day. So all of this price action is happening in 1 day. That's one session and one candle within the daily. When you jump into the 1 hour, it's telling a different picture. You can see the bulls have pushed price all the way up here. Now we've come down. This is what I was talking about, a double top. Come back down, hit this level here, come back down again, hit this level here. Then what happens? Look at this, guys. This, in the shorter time frame, is giving a front run of the signal that we were looking for before because we've got a lower low, lower low candle here. So whereas before we were halfway down, risk to reward was no good. When you jumped into the hourly, got a big signal here that candle breached the extreme low of the previous candle. Because of that, after we've had a double top, which has been rejected at resistance, we're likely to get a big push to the downside. So if you waited for the close of this candle, what would the risk to reward look like then? Pull that down. That's your risk. That's your risk above the high. And then you're shooting down here. See what that does to your risk to reward. See what that does to your risk to reward, guys. The main thing is, it's not your reward that you're thinking about. The main thing is reducing your risk. And what that allows for is a high probability move and a high confirmation, an earlier entry with a limited risk that if you're wrong, that pushes back up to the upside, which is highly unlikely because of this lower low, lower low, lower low, lower close candle. Then that makes sense to me. That makes complete sense to me. You're reducing your risk, you're increasing your reward. And then If you're wrong, guys, you're wrong with a limited amount of capital. It's all about preservation of capital. If you manage to preserve your capital and you lose 1%, 2%, 3% rather than 10%, 20%, 30%, gives you a higher chance of success, guys, because cutting your losses short and letting the winners run, that does a lot to the P&L. So that's how you can identify tops, how you can identify bottoms. So remember, guys, understand the makeup of a candlestick, get clues from a candlestick. You can tell when something's getting exhausted because of the wicks to the upside, the wicks to the downside, the indecision in the middle, i.e. the doji. The lower low, lower low, the lower low, lower close candle confirms that the bears have got momentum at resistance and it's likely to short. Now flip that on the bullish side, guys, and then the opposite occurs. Let's have a look. Let's have a look. So back to the daily. Let's pull this up. Right, we've got our support line down here. Let's pull that up. Let's have a look at this. See if we can get any clues in on the smaller time frames on this one here. So you've got your support here. You can see that support because we've got a red candle to the downside. We've got an extreme wick down here. That was pushed back up. And then we've got another wick to the downside here. That was pushed back up. Then that was met by a 3-bar reversal, guys. We talked about that earlier on, where you've got a bearish candle, you've got an indecision candle, and then you've got a green candle, which engulfs the previous candle, higher high, higher close. However, we didn't get any double bottom there, but we can look into the shorter time frame, see if there's one. Wherever that was. Go back to the daily, find out where that was. It's here. So that was on the 1st of May. So if we jump into the 1 hour on the 1st of May. So, right, that was here. So we've come back down and we'd seen what happened on the daily chart, right? So we had a wick to the upside. We had a wick to the upside. So there was 2 candles where we had a wick to the upside. Now, in the smaller time frame, those wicks to the upside, remember, hourly candles in this example, because they're hourly candles in this example, that wick to the downside ended up with a candle close on the shorter time frame. So what happened here? We got a bottom. We got a bottom. Price has come back up. It's retested as another bottom. And then guess what happens? Price moves up. So this double bottom here confirms that there's bullish momentum. What else happens? You get the higher high, you get the higher close candle. That represents a 3-bar reversal. Did get a red candle come back to the downside, but that was met by price action. It was met by bullish price action. Let me zoom into this. It was met by bullish price action, and then we continued to the upside. So that's how you can tell, guys, how you can get an edge. When you're at support, you can look for double bottoms within the shorter time frame. Initial clues are extreme wicks, which has pushed price back up above trend. Then you look into the shorter time frame. You get your double bottom. You look for your higher high, higher close at support, and you look for your lower low, lower close at resistance. And that just identifies that the bears have got momentum at resistance and the bulls have got momentum at support. Okay, so like I say, guys, next week's going to be indicators for crypto class. If you haven't watched the first 2 videos, go and watch the first 2 videos because you get a greater understanding of this video. And the aim of the game is to put everything together, mold everything together until you've got a full trading strategy. So let me know in the comments what you thought of the video, guys. Subscribe to the channel if you did find it useful. Notification bells on for next Monday, and I'll see you in the next one.